Assalamualaikum warahmatullahi and welcome everyone. In this video, I will introduce to you the process costing. For this course, we will discuss the weighted average method of costing or weighted average costing. We will discuss briefly about the process operation, something that we already touched in previous discussion on when we talk about job order costing. And then we will discuss about equivalent units involving the common major costs in production. There are direct material costs, direct labor costs, and overhead costs as part of production costs. Before we discuss process costing, we need to understand how process operation works. Process operations involve the mass productions of similar products in a continuous flow of sequential processes. The major difference between job order operation and process operation will be the products that it produces. Process operation produces similar items every period and in huge amount, therefore mass production. So you can imagine that in process operation, it will use a standardized process that produces the same things period after period. However, for job order operation, it produces unique products according to the needs of its customers. Thus, you can imagine that it involves a customized process to make the unique products. What's shown here are examples of companies and their products that are produced in mass production using process operation. Thus, determining the cost would involve process costing. Process costing is a method of costing used mainly in manufacturing where units are continuously mass-produced through one or more processes. In process costing, it is the process that is costed, unlike job costing where each job is costed separately. The method used is to take the total cost of the process and average it over the units of production. Since we are costing the process, understanding such processes is crucial for measuring product costs. Increasingly, process operations use machines and automation to control product quality and reduce manufacturing costs. Before we discuss further about process costing, let's have a look at some similarities and differences in job order costing and process costing. For similarities, both job order costing and process costing use materials, labor, and overhead costs. And then both aim to compute the cost per unit of product or service. For differences, there are a few. In terms of the cost object, that is the object that becomes the aim for calculating cost. For job order costing, the cost object is a job or job lot. On the other hand, in process costing, the cost object is the process or a department where a process or processes take place. In terms of cost per unit, job order costing measures cost per unit after completion of a job, determining the cost per job. For process costing, it measures unit costs at the end of a period, such as a month, by combining costs per unit from each process. In terms of internal reporting, job order system uses job cost sheet as we have seen in previous discussion. As for process system, it uses production cost report. And finally, in terms of work in process inventory, under JOC, it will have only one work in process account. On the other hand, PROC will have one work in process inventory for every process that it has. In this session, we want to discuss how do we measure per unit cost under process costing. Since we need to combine costs per unit for each process or each department, to get to the total cost per unit of goods, we need to determine how much is the per unit cost per each process or department. And we know that cost per unit is simply given by total cost in each process divided by the number of units produced. We also know that total cost of production involves costs for direct materials and costs for conversion. And we also know that units produced for a period can include unfinished goods or work in process units. So you can imagine goods that have completed the process in one department will be identified as completed and will be transferred out of that process or department to another process or department, leaving any goods that have not completed the process for the period, that is work in process units, and it will be completed in another period. The total cost in that department, in this example roasting department, shall include the cost of producing the work in process goods as well, because the fact is the cost has been incurred and we need to recognize that. But to allocate the total cost of that department, which include the cost of work in process, to only the completed goods to get to cost per unit for that department, that is not logical and definitely not an accurate way to determine the cost per unit for that department for that period. To solve for that, we have a process costing called weighted average cost method or weighted average costing. Weighted average cost or weighted average costing is one of three types of process costing. The other two are standard costing and first in first out costing. Weighted average costing is the most appropriate process costing to use if we have no standard costing and there is not much change in the cost from period to period. So it is safe to use weighted average costing, which is quite simple. Under weighted average costing, it assumes that all costs from previous period representing work in process from previous period and costs from the current period are combined and assigned to produced units. But since the produced units also include work in process for the current period, the work in process will be transformed into equivalent units or EUP in short, meaning from the cost of units that are still in process, how many completed units can it produce? Then only we can calculate the cost per unit for that department or process. Before we discuss how weighted average costing works, I want to highlight the cost flow in process costing so that we understand how the weighted average works. Material costs naturally will be added at the beginning of the process because without materials, there is nothing to work on. These materials will then be used in producing goods. Thus, the conversion cost, which includes costs of direct labor who convert the materials and cost of overhead, will be added gradually in the process. So we can imagine that the direct material cost will be 100% utilized at the very beginning. While for conversion costs, we might have some units that are not yet completed the process, that is, units that are still under work in process. Therefore, the cost incurred for conversion will cover both completed units and work in process units. Let's now talk about weighted average costing. As mentioned earlier, the weighted average costing combines units and costs across two periods in computing equivalent units and cost per equivalent unit. The four steps demonstrate process costing using a weighted average costings are as follows. First, determine physical flow of units. Second, compute equivalent units of production. Third, compute cost per equivalent units of production. And finally, assign and reconcile costs. For illustration purposes, we will take an example from a factory that produces mixed dried fruits and nuts or trail mix. A unit of trail mix is identified as a cup of trail mix. Step 1 is to determine the number of units to account for and units accounted for. Units to account for means units that we are going to work on and process in the department. Units accounted for means units that already been processed in the department. Both totals will be the same, but what more important is the separation between completed units and work in process units. For this particular case, The first process is roasting of the nuts and dried fruits in the roasting department. On the left, we have 120,000 units to account for, which consisted of 30,000 units beginning work in process inventory from previous period, in this case in the month of March, plus 90,000 units started in the new period, which is in the month of April. On the right, we matched the 120,000 units that we have to work at the very beginning of the period with 120,000 units accounted for or that have been through the roasting process, where of it 100,000 units completed and transferred out of the department, plus 20,000 units are not yet completing the process, therefore identified as ending work in process inventory. To make it more clear, this table would help to do that. Whereas we can see here, from the 120,000 units that we have for the period, at the end of the period, it has been identified that 100,000 of it are completed and transferred out from the department, and the balance of 20,000 units are still in process. In a way, we have reconciled the units that we started with what we ended up having at the end of the month. In step 2, we will compute equivalent units of productions, or EUP. EUP is the number of whole units that could have been started and completed given the costs incurred in the period. The reason we use equivalent units of production, as I mentioned before, is that some units have not completed the process at the end of a period but still need to be assigned costs. To enable us to compute EUP, we need information about the degree of completion of the units given the costs incurred. Now please remember we have two major costs, direct material costs and conversion costs. In this illustration, it shows percent of complete data for direct materials and conversion for the roasting department. Those percents are needed to compute equivalent units of production. In both roasting and blending departments, direct materials enter production at the beginning of the process, while conversion costs occur throughout each department's processing. We can see from the data given that beginning work in process inventory is 100% complete for direct materials, but only 65% complete for conversion. For ending work in process inventory, it is 100% complete for direct materials, but only 25% complete for conversion. And naturally, units completed and transferred to the blending department are 100% complete for both direct materials and conversion. We will then separately compute equivalent units of production for direct materials and conversion costs. This is because direct materials and conversion costs typically enter processes at different rates. The formula to compute equivalent units of productions, EUP, is by multiplying the units with the percentage of completion. The EUP for both direct materials and conversion costs is given by the equivalent units completed plus equivalent units in ending work in process. So we need to compute the equivalent units of production for both direct materials and conversion separately. We start with the 120,000 units accounted for from step 1 and convert them to EUP. Units completed and transferred out are always 100% complete for both materials and conversion. This means the roasting department completed and transferred 100,000 EUP for both materials and conversion. Ending work in process inventory has 20,000 partially complete units. Direct materials is 100% complete. This means it has 20,000 EUP, and conversion is 25% complete. This means it has 5,000 EUP. Total equivalent units of production equals 120,000 for direct materials and 105,000 for conversion. The amounts of inputs used to produce 100,000 completed units and to start 20,000 additional units is equivalent to the amounts of direct materials in 120,000 whole units and the amounts of conversions in 105,000 whole units. In step 3, we use equivalent units of production from step 2 along with cost data to compute cost per equivalent unit. Production cost data for the roasting department are shown here in the top table. Note that the total production costs incurred for the month of April is at 845,100. Now, to compute cost per equivalent unit, we add costs for beginning work in process to costs added within the period, and then divide by equivalent units of production from step 2. From here, we determine that the cost for direct materials is $3 per equivalent units of production, and for conversion is at $4.62 per equivalent units of production. In step 4, we use the EUP from step 2 and the cost per EUP from step 3 to assign costs to the 100,000 units completed and transferred out and to the 20,000 units in ending work in process. The 100,000 units completed and transferred out used 100,000 EUP of direct materials and 100,000 EUP of conversion. Therefore, we assign $300,000 of direct material cost to those units and $462,000 of conversion cost to those units. Total cost of the 100,000 units completed and transferred out is at $762,000. For the 20,000 units in work in process inventory at period end, it used 20,000 EUP of direct materials at a cost of $3 per EUP, which results in direct material cost of work in process inventory of $60,000. For conversion, we use the 5,000 EUP and add $4.62 conversion cost per EUP to compute conversion costs for work in process inventory of $23,100. Total cost of work in process inventory at period end is at $83,100. From this allocation, we can verify that total costs assigned to units completed and transferred out plus the costs of units in ending work in process equal the costs incurred by production given in the previous production cost data table. To end the discussion on process costing, let's talk about the use of process cost information. The use for information provided by the process costing includes to control costs, to evaluate performance, to evaluate process improvements, and to prepare financial statements. Under controlling costs, data on the department's equivalent costs per unit can be compared with prior months. If materials and/or conversion costs have changed a lot, managers should determine the reason for that significant change and take corrective action. Under evaluating performance, top management can evaluate department managers based on their control of costs. Costs per equivalent units are often compared to budgeted amounts. Under evaluating process improvements, the management can evaluate the success of the improvements implemented by examining how costs per equivalent unit change after process improvements. And of course, the data computed shall be presented in the financial statements where cost of goods sold and ending inventory amounts computed from process costing are reported in the income statement and balance sheet respectively. So that is all about introduction to process costing, where I introduced to you one of the three types of the costing method under process costing, which is weighted average costing. Now please try the exercise included at the end of your PowerPoint copy. In our next session, I will be introducing you to CVP analysis or cost volume profit analysis. Until then, thank you very much for your attention. Wassalamualaikum warahmatullahi wabarakatuh.